a little confusion going on in America right now because you're hearing about all these pushes to change the minimum wage. Sometimes cities are doing it. Sometimes county areas are doing it. You have the federal government talking about doing it to raise it. You have if you're a federal government contractor, you're going to have a different set of rules to abide by. And, it's just always different, right? So keep that in mind to pay attention to that and look at it. So on the federal minimum wage, currently it is truly $7.25 an hour, right? But it's going up at times, being discussed. President Obama would like to increase it to $10.10 an hour, all right? Now, in some states it's different, and there's state minimum wage laws in approximately 30 states that are higher than the federal minimum wage. If you're a federal contractor, you have to pay, as of this year, January 1st, 2015, $10.10 an hour, and it will be adjusted annually for cost of living. And federal overtime, which is required to be paid for non-exempt employees, which means they could be hourly, they could be piece rate, and they could be salaried non-exempt, which means they're not exempt from overtime. So, you have salaried exempt from overtime, salaried non-exempt from overtime. All of the people who are non-exempt, salary, hourly, piece rate have to be paid overtime over 40 hours. 1.5 times the regular rate of pay for all hours over 40. On piece rate, it turns out to be half time because they're already paid straight time for all hours worked for their piece rate for that week. So you want to make sure that payroll is doing the auditing of these things. And if you're in some states like California, for example, you pay overtime, it's still 8 hours in a day. If you have collective bargaining agreements and you work with union signatories, you have to pay pursuant to those collective bargaining agreements, which may require overtime after a certain number of hours. Sometimes it's 10 hours a day. So just be aware in payroll how to build that into your manual and watch for that and check it on the paychecks when you're issuing payroll. Now, independent contractor, common exemptions. So let's talk about that now. There are different tax treatments of employees and independent contractors. The penalties for incorrectly categorizing employees and independent contractors are high, so you don't want to make a mistake with this. It's really under scrutiny right now, and it's a very high-profile area for the Department of Labor to pursue. And sometimes your state unemployment agencies by each state are engaging in these types of audits regularly because they want to claim that everybody's an employee because that obviously increases tax revenues and other things that they can collect upon. So, a lot of employees, they like to be independent contractors. They like to work for one or more companies. They like a variety of work and things like that. Especially in the newer generations, they actually, like that. They don't want to be an employee for 35 years necessarily at the same company. Department of Labor, first of all, we used to have the IRS, we do have the IRS, I should say, who focused on these issues, and they would try to determine if somebody was really an independent contractor or an employee. And they looked at it from the control test standard. Well, Department of Labor has changed that, and they've entered into an MOU, a Memorandum of Understanding with the IRS and with 23 states to fight misclassification. Companies who call people independent contractors who are really employees. So that's one of the big pushes, and right now the Wage and Hour Division of DOL has obtained $79 million in back wages for 109,000 workers. So this is a big issue. Department of Labor has come out with a big initiative on it, and they have redefined what they're going to use for the standards of determining an independent contractor. They are going to use the standard, not the IRS standard of a control test. They are changing it to the economic realities test. They did not go through rulemaking on this. It did not get adopted by Congress. What happened for the first time is in 2015, this year, we have the first what's called administrative interpretation. It's talked about on PowerPoint 24. And basically it says the application of the Fair Labor Standards Act suffer or permit standards, so they're redefining a phrase in there, in the identification of employees who are misclassified as independent contractors. Their view is they're going to find when they come out that more people are employees rather than independent contractors, and that is their goal based on this interpretation. Now, again, it did not go through rulemaking. It's an interpretation, but they did it in a way that it is their guidance to all their investigators, and so you need to relook at any of your independent contractors you're using, figure out what kind of written agreements you have, make sure you've got a W-9 signed for independent contractors, because that's where you issue your 1099s from for those individuals. They check the business box. So you want to think about reviewing any independent contractors you have and make sure you have a written agreement with every single independent contractor. It's very important. According to the AI, which is a DOL administrative interpretation, it's called number 2015, number 1. Notice it's the one you did. The FLSA, or the Fair Labor Standards Act, provides a broader scope of employment than the common law control test that IRS used for independent contractors. Courts have established economics reality tests focusing on whether the worker is economically dependent on the employer, meaning they get most of their work from that employer. That's what DOL wants to say. If they get most of your work only from you as an employer, they want to say, well, that must be an employee. We would argue that's not always true. People in America have a right to work for as many companies as they want if they're a true independent contractor, but they may choose for business reasons over time to narrow who their customer base is to one or two companies. Just because it saves them time and headache on getting to know people, they're putting all their eggs in one basket. It's a risk to them, but that's a business risk they can take. So we think that, DOL should be open-minded on that point. So what does the economic realities test look like? What are the factors? So I put that in here so you can look into that. It's on PowerPoint 26. There's a variety of factors. Whether the work constitutes an integral part of the hiring party's business. Is it the core business? That's really what they're asking. Is the worker's opportunity for loss or profit depending on his or her own managerial skills? They like it more if it is, but if it's really not and he has no control of it, then they think, well, that should just be an employee. Is there any investment made by the worker? They don't define any dollar amount for that. They just say, did they make an investment? So it's going to depend on the industry. It's very fact-specific. The industry, the amount of materials needed, equipment, those kind of things. The permanency of the arrangement. Is it a long-going, on-term relationship that means they're more of an employee because it's not temporary, it's not based seasonal, it's not based on working for a couple of employers at the same time, those kind of things. What skills, training, or certifications are needed for the work? Sometimes if there's a lot of certifications and training required, maybe they could be a consultant and be an independent contractor. But if they're entry-level positions, it's hard to see sometimes for the government to say, hey, why is that an independent contractor? That's just an employee. And then the degree of control exercised or retained by the hiring party. So here are a couple of examples that the DOL gave us. I've got a few in here. I'm not going to go through very many. I'm just going to pick a couple so we can get onto some other topics because there's so many things to cover. But this will give you an idea that here's what you should do as a payroll department to audit it. First of all, for everyone who receives a 1099 at your company, you should go through and compare these next few PowerPoints with what you're doing. And best practice tips I can give you is you need to make sure you have a W-9 form signed and on file for every single person that is receiving a 1099. Number two, you should make sure you have a signed, written independent contractor agreement because that's the first step you must have for anyone who is an independent contractor. Whether it's your cleaning service that comes to your building at night, it's not your core business, everybody needs to sign one with you. So keep in mind, and if they do your core work, my third point is we like to have a whole independent contractor kit that demonstrates that they are more likely to be an independent contractor than an employee, even though we know it's never for sure. It's never that clear, but that helps to have that. So be familiar with this whole rejection to control test that you're used to, and you're going to have to revamp everything you've done, even the agreements and your dialogue when you're hiring an independent contractor. There's no single factor of economics reality test that's determinative, but it should be viewed in the totality. So it's one of those things that's going to be the whole set of circumstance. So that's what PowerPoint, 26, 27, 28, and a few after that follow up with. What is an integral part of the employer's business mean? Well, it's defined on PowerPoint 29. Many courts find that controlling. Whether a true independent contractor's work is unlikely to be integral to the employer's business. That one, so if you're hiring independent contractors to do cleaning at your building and you're a tile company or you're a restaurant, more likely to find that that's not integral for the cleaning of the building, that won't be considered an employee. But the more it's integral to what you do every day, if you have two workers working side by side and it's not a special project or a temporary or seasonal need or they're not someone working for other people, they just are doing that core job side by side, they may be an employee. So you may have misclassified them and have to deal with that. So those are the things you're looking for there. PowerPoint 30 gives you an example about a construction company. They frame residential homes. The carpenters are integral to the employer's business because they're a framer. And so if you're a construction company, though, that contracts with a software developer to create software that assists companies in tracking bids, scheduling projects, the software developer his work would not be integral to the construction company's work. So it makes common sense. It's what you would think it would be. And again, I'm just going to fly through these next few slides. So they're going to be there. I'm going to flip through them. But it's things like, does the worker's managerial skill affect their opportunity for profit or loss? The ability to make more money by working more hours or obtaining a bonus for quality work is not a factor for DOL of the worker's managerial skills. Independent contractors have a true opportunity for loss, not only profit. So those are the kind of things they're going to look at after the fact. They come in and they would go back 3 years in looking at how you're treating these people. There's an example in here. Let me see. Yeah, that's it. This one on PowerPoint 32 talks about the worker does not exercise managerial skill that affects his profit or loss. So this is about a cleaning company. He performs assignments only as determined by the cleaning company, does not independently schedule assignments, does not solicit for additional work, does not advertise his services, and does not endeavor to reduce costs. That sounds more like an employee. In contrast, the one at the bottom of this PowerPoint 32, the worker provides cleaning services for corporate clients, produces advertising, negotiates the contract, decides which jobs to perform, can walk away from others. He decides to hire and recruits new clients. DOL says this is an example where the person is exercising managerial skill and affects his opportunity for profit and loss, which is indicative of an independent contractor. So that example is from the administrative opinion. That's a DOL example. So that gives you an idea on that. Compare and contrast what you need to be doing for purposes of looking at that independent contractor relationship. Okay, now I'm going to skip through the rest. So you'll see PowerPoint 33 just says the next question, and that's what a few of these do. But I wanted you to have all of them with the scenarios. These come right out of DOL's summary and suggestions. So I'm just going to push through them a little bit. But I want you to know they're there. It's not going to apply to everybody on the phone today. But I did put in on PowerPoint 41 the best practices regarding independent contractors, that written agreement, the signed W-9, the checklist demonstrating factors that show independent contractor status, and obtain copies of business cards and other items that you can put in the file to show they're truly an outside business and run it that way. Okay, so that's one factor. Another big one. So we have to talk about that because that's been a big push right now. All right, what's another big one for payroll to have to just kind of know about and pay attention to? Well, the common FLSA exemptions, white-collar employees. All right, this is what's being talked about, but there's going to be some changes, and they're going to raise the amount of salary that someone has to make in order to qualify for being a salaried exempt employee. So, okay, payroll should have a list. And in the payroll department system, it should identify for every single person at your company, what did you classify them as? Are they SE, salaried exempt, SNE, salaried non-exempt, H for hourly? You can use different codes, but these are general ones people use. P for piece rate. Sometimes it will have other fluctuating work week is F. So whatever you're using. So you should be able to go in, print up a list of employees, and look at it right now today and know where are these categories. And then you can go through and match up to these tests on these next slides of are we doing it correctly. And that's something that sometimes falls to payroll to make those determinations. If you have HR, you can work with them on it, and they'll help you with it. But you have to make a determination and figure out what to do. So what are our categories? So we mentioned salaried exempt is very important to companies. That means they can work as many hours as they want if they're truly salaried exempt, and there's no overtime paid. So like my job would be salaried exempt. I got to work till everybody's handled and everything's done and clients are taken care of. There's not a time limit on that. I can't just punch in 8 to 5. A doctor that works in a hospital would have the same issue. They're salaried exempt. An executive or manager, general manager or president would also be the same. They have to work till it's done. Controllers, all those things. But we have employees who work underneath them or with them on their teams, and those folks could be non-exempt, salaried or an hourly, whatever. But you got to really worry about, is the person truly salaried exempt? Sometimes the way to do it is look at the positions. So what DOL does, when they do an audit, they have you run a report of all employee names and then what's their category. They almost always go to all the salaried non-exempt first to see if they're truly non-exempt from overtime or whether they should actually be getting paid overtime. They'll go to the assistant to the president, assistant to the controller, assistant superintendent. Whatever the word assistant is, you should be looking at it closely to make sure they can even qualify if you don't want to pay them for overtime. So, categories. So the next few slides again. The other ones I gave you a few minutes ago were about independent contractor tests. Now we're going to do white-collar criminal tests, and then you can look at that. Then we're going to move on. I'm not going to go through all these in great detail either, but enough that you can issue spot it, compare it to what you have by your category, and then figure out what you might need to adjust. So there's generally 4 categories: executive, administrative, professional or outside sales. So that's on PowerPoint 42. There are certain computer employees that may be exempt professionals too. The misclassification of worker as overtime exempt is another DOL hot button issue, but this is the bigger one too, is this white collar overtime exemption. So they are seeing this proposed regulation that they want to change the monetary standards. So with this salaried exempt, let me back up a minute and make it more clear. There are a couple components to determine if you're an executive, a professional, administrative, or computer outside sales exemption from overtime. One component of it is the salary-based test. There's going to be job duties that matter. There'll be the salary-based test that matters, and the salary level. So if you paid salary, depends on the amount you're paid, and it depends on your job duties. Simple as that. That's what you're going to look at. Well, DOL came out this year with a proposed regulation to change the salary amount for this classification. It's been like $24,000 something for years. They want to almost double it, and that's going to make a huge difference, and it means in their own estimation that before this new rule goes into place, if it goes, it's not there yet, there's lots of comments in on it, thousands of comments to lower the amount, but nonetheless, it was about $24,000, it's going up to double. All those people between those dollar amounts that used to be salary exempt are going to have to be paid overtime. That's what it means. DOL says that it will cover 11 million more people with overtime because it will change all these people who either misclassified as independent contractors or fall because of the salary increase that they're going to say you have to meet in order to be considered salary exempt, and doubling it, they're going to fall out and be subject to overtime. So you do need to pay attention to that. And again, this is the test on PowerPoint 44. How do you choose what the exemption is? It's salary level, salary basis, and job duties in order to be even considered to be qualifying for one of these white-collar exemptions, they call it. The current minimum salary is $23,660, so it'll be $455 a week. Now you can see on item 7 there on PowerPoint 45 what they want to move it to. They want to move it to $47,892 a year. So that is going to mean that all those people in your companies, and you should be doing this analysis right now with your team, is those people between $23,660 and $47,892 who are salary exempt today, you may have to change them to hourly, salary non-exempt, so you keep track of overtime, and you and payroll are going to have to keep track of that and then pay overtime, piece rate, or some other method. So it's a very big adjustment. It's going to affect all the departments of companies in the country, and it's going to change things significantly. There is a highly compensated test for white-collar exemption. If the total annual compensation is at least $100,000 and the employer makes it up by year-end, they perform office or non-manual work. They customarily and regularly perform any one or more of the exempt duties identified in the standards for executive, administrative, or professional. That's for job duties. They're going to increase that to $122,148, but those could be exempt still. The salary basis test depends on a predetermined amount of compensation, guaranteed to be paid each pay period, weekly or whatever it is, biweekly. Can't be reduced because of variations of quality or quantity of the work. Must be paid the full salary for any week in which the employee performs any work, unless we have the salary docking rules, but that would be any work. need not be paid in any work week when no work is performed. So those are some of the rules. For someone who's salary exempt, usually payroll has to keep track of what to deduct. So this is your tips and your PowerPoints on that. The employee is not paid on a salary basis if deductions from the predetermined salary are made for absences occasioned by the employer or for operating requirements of the business. If the employee is ready, willing, and able to work, deductions may not be made for time when work is not available. Employees need not be paid for work weeks when they do not perform any work, as you mentioned. There are 7 exceptions from the no docking rule. So it's usually called a no docking rule, but these are your list that goes in your book on your payroll manual on what can you dock for a salaried exempt individual and not jeopardize that status. Well, absences from work for 1 or more full days for personal reasons other than sickness or disability for sure are not covered. But if they start in the morning for an hour and then go, you'd be paying them, right? So, absence from work for 1 or more full days due to sickness or disability, as long as you have a plan, policy, or practice of providing this for people for these leaves. To offset any amounts received as payment for jury fees, sometimes people are gone, or military pay. Penalties imposed in good faith for violating safety rules of major significance. Unpaid disciplinary suspensions of 1 or more days. Again, you can deduct for these things. Proportionate part of an employee's full salary may be paid for time actually worked in the first and last weeks of employment, and unpaid leave taken pursuant to FMLA. So that's those 2 PowerPoints, 49 and 50 are a really good guide to have in your book. Now, improper deductions, you can't deduct for partial day absence. That's on PowerPoint 51. You can't deduct for pay because the employer was closed due to inclement weather. Deduction of 3 days of pay because the employee was absent from work for jury duty, rather than merely offsetting the amount received as payment for the jury duty. Deduction for a 2-day absence due to a minor illness when the employer does not provide wage replacement benefits for such absences as an overall plan. Now, if I just give you some ideas for issue spotting, what's the consequence if you do it wrong? If payroll and HR is in charge of this, as general manager, it results in improper deductions. You may have to lose the exemption, so that person would not be considered exempt from overtime. And they could go back and claim all that overtime, which could be a huge problem for an employer. So that's why it's important to do this correctly, and that, part of the internal QA auditing is happening, quality control auditing is happening from payroll. Let's see what else. Oh, yeah, a few points here on PowerPoint 53. Payroll practices that do not violate the salary basis test. Taking deductions from exempt employees' accrued leave accounts, that's fine. Requiring exempt employees to keep track of hours. So if someone's exempt, salary exempt, you still can have them keep track of hours. That's not going to change anything. So if you find you have a gray area position that you look for you do the list today, you see how many people say assistant beside their name, you want to look at that further. You certainly, as a precaution, even if you conclude you think they're more salaried exempt than non-exempt, you can keep doing timesheets so that you have a record of it in case you lose that battle one day down the road. It's far better to have some record than have DOL come in, Department of Labor, and say, you have no time records, so we're just going to ask and go with what the employee says. If they say they work 60 hours a week, that's what we're going to say you have to pay them for the last 3 years. So that's why it's important sometimes to have that record. Administrative white collar exemption. What is the administrative? Well, they're looking at whether to revise these duties tests, but basically it's the performance of office or non-manual work directly related to the management or general business operations of the employer or the employer's customers. And the primary duty includes the exercise of discretion and independent judgment with respect to matters of significance. So remember, we have to talk about, are they on salary to be salaried exempt? First of all, they have to be on salary. Number 2, are they making the minimum amounts of salary required for purposes of these rules that we just went through? And then number 3, here's the test for their job duties and the test that they put for administrative, and then we'll talk about executive and go through it. So those are the things you're looking for. The executive employee exemption, that's the second category, is, again, it has to be the primary duty as management of the enterprise or a department. They regularly direct the work of 2 or more employees. That falls under executive as part of the test. And they have authority to hire or fire other employees, that kind of thing. So that would be different than administrative. This is an executive position then. The next one is a learned professional exemption. Sometimes it might be because they've obtained they're a doctor, or they're a lawyer, or they're an engineer. But they don't let you put people in this category, even if they have the best experience, they're self-taught, they've done it for years, they really do know their stuff, and they really would qualify at any college level or master level program, but they just didn't get the degree. But DOL says they will not allow those people to be salaried exempt if they are doing it. We get this a lot with engineers. They work in the estimating department, they figure things out, they're very good, they're very bright, but they didn't finish their degree. DOL says they cannot be a salaried exempt person under these learned professional exemptions. So that's what that means. Creative professional exemption exists. Sometimes we have people in companies that are doing creative work. They would be qualifying computer-related applications. This is not your help desk person, though, but they have to make a certain minimum. But those people sometimes can qualify outside sales. Again, customarily and regularly engaged away from the company's place of business. This is not for inside sales, only outside. Duty involves making sales or obtaining orders. It is exempt from minimum wage and overtime under FLSA that may not be exempt under state law.